All right, welcome back to Market Day Report. I am the cow guy. Let's get to these markets right away and see what we've got going on. It's been an interesting day. We'll start with corn. Wasn't really doing much overnight. We've kind of sold off a little bit. 3.25 cents lower in sep corn to 377 3/4. That's just a tick off the low, and we've had about a 6 cent range. If you go out to the new crop Ds, that's one more month out. That's down 2 cents. 398 3/4. We lost that four handle, and we're only one tick, a quarter cent off the low of the day, and we've had about a 5.25 cent range there. That's corn. Moving over to the beans. We've been slip sliding away in the beans. I guess we've stopped. SEP's down SEP's up 3.5 cents, but it's kind of settled in here. 9.55 3/4 is last. We've got about 4 cents off the lows, but still 6 cents off the highs. Well, I guess that's 5.25 cents off the highs. November, that's the new crop. 4.75 cents better there to 9.73 1/4. 5.25 cents off the lows and 5 cents from the high. So we're right smack dab in the middle of the range for soybeans. Let's take a look at the Chicago wheat market. That's lower by between 2.5 to 3 cents ish. September's down 2.75 to 5.32 even, just to tick off the low of the day, and well off the highs by about 15.5 cents. So that'll give you an idea where we sit there. March is down 2.75 cents to 5.71 1/2, just 2 ticks off the low there. Wheat in Kansas City, that's going to be the hard red. It's down about a nickel across the board. SEP's off 5.25 cents to 5.41. That's 3 ticks off the low there and well off the highs by 16.75 cents. That'll give you an idea about that market. March, that's down 5 cents as well to 5.68 1/2. A tick off the low of the day, 14 cents, well, 13.5 cents off the highs. See if spring wheat suffers from the same melees, and it does. We're 2 cents lower in SEP. 5.90s last, 2 ticks off the low of the day, but we're 11.25 cents off the highs. March is down 2.75 cents to 6.22 3/4. All right, so the wheat market's all at the low end of their ranges, trading just basically on the lows. Cotton, 28 points better in that D's market to 67.33. That's D's cotton. That's the new crop. 28 points better to 67.33 as it kind of slides towards the lower end. We're only about 28 points off the low of the day there. All right, let's bring him in. Mr. Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. Tommy, kind of a quiet one today.
Yeah, it's a rainy day here, so working on the back porch. Temperatures are mild. If you wanted to write a recipe on how to grow big bushels on August 15th, which it's payday, this would be how to do it. Speaking of payday, I have to say, in all honesty, that every single analyst you have on will make money this year, but a lot of the farmers that we work with won't, and that's interesting because it's kind of hypocritical in that someone's giving you advice who, no matter what's going to make money, and yet the very people, whether they choose to take it or not, are almost guaranteed some significant losses here this year, unless they get the bushels. Now, what's scarier about that is when you look at the matrix for 25 and you just take, if you called around and say, hey, I'm going to be a farmer in 25, trying to negotiate cash rent, I'm going to buy some fertilizer. You've had him on your show. Is it Josh Linville from FC Stone or Arlen? But Josh is an absolute expert on fertilizer, and he put out some tweets this morning that just caught my eye talking about inputs for 25. So typically, Scott and viewers and listeners, when you buy fertilizer at this time of year, you're supposed to sell the product or some of the product for next year, like you're legging into the spread. You buy the fertilizer, that means you're going to become long corn, and you're committing to becoming long corn or wheat, right? And those numbers are upside down. So we're looking at significant losses again for 25. Now, this year we're going to be blessed with the bushels, and that's going to be awesome because we're going to need every bushel. But what's happening, as you know, and you were out in the country last week, and it'd be interesting to see what those people in your crowd talked about, but we're going to have big grain piles around, and we're going to have to truly understand how to manage that carry of having too much product. So there's the product leaking from 23, and there's all the product coming for 24. And although it looked like interest rates were going to calm down, as you and I talked off air, bonds are down 2 points today. That means interest rates are actually going up, with the Dow Jones up 400. What do you think, Scott? What the people you met in Indiana last week? How was the attitude out there?
Clearly, it's a tough time, and unfortunately, or not unfortunately, but there are a lot of fertilizer salesmen there too. I would say the fact that the crops look, the crops look
Did you break up any fights or what happened?
Right. They did talk about the fact that the math doesn't add up. There was a lot of guys there that are going to have a good year this year, despite a lot of bushels. They got a lot of corn sold, almost up around that $5 level. But they weren't excited at all. They couldn't take a victory lap because they knew that they were actually looking at a 2025 crop where they might have to lock in a loss. I mean, at the way the numbers were kind of playing out right now, it looks difficult for next year. So those input prices aren't really coming down like you would have thought they would have, right? And a lot of things are kind of hanging in there. So even though this could have been a good year had you done some good hedges, it's still going to be, you don't have the chance to do those good hedges for 2025. That's the problem. So we'll see. Maybe, and I also think, I can't remember, Tommy, it's been a long time, maybe if ever, that we never really had a growing scare.
Just in the spring, when Minnesota and northern Iowa flooded, I mean, my
Right.
clients in Minnesota were like, we're going PP. In the end, they planted less corn and they slammed in more beans, aka the
Yep.
USDA number on Monday said, you know what, American farmer planted a ton of beans with a 52, 53 bushel yield. So they snuck the beans in there on the back end.
But we didn't really get that, July. There was nothing really there to give the guys a second chance of maybe laying off some stuff. So it's all kind of sitting around. We'll see. But you're right. It's unfortunate, but you're gonna have to be more efficient than ever next year. I think that's gonna be the case. They're gonna have to call guys like you. That's for sure. All right, stay right there. We're gonna go away. We're gonna pay some bills. We're gonna come back and talk more with Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. We'll be right back. All right, welcome back. Let's go through some of these livestock prices real quick here. I've got a live cattle board pulled up. Let's see what we've got going on. And it's a little bit of a loss here today, folks. October live cattle down $1.07 to 181.05. And that's about, let's say, we can say that's 40 cents off the low of the day there. Deese, that's down 57 cents to 181.02. That's live cattle. We're off around between 40 to a buck lower. Feeder cattle. Let's go right to SEP. That's down 52 cents to 243.82. They've all just suddenly taken a little bit of a turn for the worse here. November's down $1.05 to 239.75. Again, that's pretty much 20 cents off the lows there. And let's move over to the lean hogs. We'll get back to our guest analysts. They are a little bit better here still. October's up 75 cents to 76.67, and that's not too far off the high by about 7 cents. Feb's up 82 cents to 71.47. All right, Tommy, got 1 minute for you. What do you got for us?
Yeah, real quick, just touch back on that stock market. Walmart had earnings. You got to really deep dive in those earnings to listen to the chatter. But the Dow Jones is up 500. When I see the Dow Jones up 500, NASDAQ, I can't even see what it is, up 400, and cattle are down, I say, hey, I know the rich people are rich today, but maybe the average working class is starting to struggle. And you talk about that so much on the Cow Guy. You're going to see pressure at the stores. Seeing hogs up a little bit. I really got no great news except for smart people I know are pretty aggressively hedged in cattle. And even though a lot of people think it can go higher, they're not going to take that chance. I suggest LRP or selling futures or doing something aggressive. And, that's all. I mean, the cattle guy's got to be looking over at the corn guy and saying, I don't want that to happen to me. Back to you.
Exactly right. Good stuff as usual. They should have that hedge on. Thanks, Tommy. Have a great day. Tommy Grisafi coming to us from Advanced Trading in Valparaiso, Indiana. It's going to be tough.
That's a good point to make, because you often say, who's in the stock market? How many people really, the percentage of people that are playing in the stock market?
10% of the 10%, 93% of the stocks are owned by 10% of the people.
Right. So the rest of us, of course, you were watching that the livestock, and you're watching that commodity and not doing as well, and that's a telltale sign.
I've argued that the lower end of our economy has been in a recession for a couple of years already.
Yeah, and people feel it for sure.
Absolutely.
Thank you, Scott.